Welcome to the CEO of Destiny podcast, where you will find the tools to fulfill the purpose of your generation and wildly succeed in the marketplace. And now your host, Andre J. Benjamin.
All right, greetings. Welcome to the CEO of Destiny show. I'm your host, Andre J. Benjamin. I am delighted today to have an author, also a thought leader in this field of blockchain. You all know we're all trying to demystify and get away from all the uncertainty, the fear, uncertainty, the doubt, the anxiety that people are causing through a lot of misinformation. And I think because something is new, people find a hard time connecting to it outside of kind of their mainstream sources, you know, whether they see a provocative title on an article that they've shared from someone, or they just see a headline on their traditional news sources. But we're gonna be delighted today to really unpack some of the things that our guest has written in their book. And I think it's a great resource. So we're gonna dig into it. I have Baxter Hines. Everybody welcome Baxter Hines. How are you doing, Baxter?
I'm doing great. Thank you so much for having me on your show today, Andre.
Oh man, I'm excited. So let's jump a little bit into, I'm a big Marvel fan. So give me a little of your origin story. You know, we like to know how you were before you got bit by the spider or mutated, or what took place in young Baxter's life for you to end up at the point you're at now.
Gosh, if we go that far back to young Baxter's life, you would never thought I'd have ended up here. Strangely enough, my parents were in the antique furniture business. So you wouldn't think I would have ended up in cutting edge technology like blockchain, but learned a lot of business principles from them that are timeless, and just different traits about hard work and stick-to-itness that have helped out quite a bit. But, you know, going further out in time, I was in the asset management industry. So I worked for a firm here in Dallas called NFJ Investment Group. We were one of the largest money managers in the state. I was one of 6 portfolio managers overseeing about $40 billion of client money, generating income from dividend paying stocks. And again, people say, well, how in the world did you end up in the blockchain space? And I first heard about Bitcoin in 2011, way back when, and I didn't do anything with it, which I really regret now, because if I'd done that that early on, you know, again, woulda, coulda, shoulda. But I really, as time went on, I fell in love with the technology. I realized that the blockchain itself was going to be the most important innovation for our society since the internet. And I gravitated towards it. I wanted to learn everything that I could. As you mentioned, I wrote a book with John Wiley Sons called Digital Finance, where I outlined my vision of how blockchain and distributed ledger technology were going to be an incredibly disruptive force for the financial industry. Blockchain is going to be much bigger than that. It's going to affect agriculture and healthcare, and you name it. There are going to be very few industries that aren't affected. But what I wrote about in the book was really that, number one, Bitcoin was just the first inning or the first pitch in this game of what was about to unfold with blockchain. You're going to have cryptocurrencies as a whole. We're going to mushroom. You're going to start seeing the dollar, the yen, the euro, the fiat currencies that we use today going onto the blockchain to create this better, faster, cheaper system of payments. And then finally, you were going to see real assets going onto the blockchain. You might have heard of the tokenization of assets, which is a huge thing.
Yeah, we're going to dig into that. We're going to dig into tokenization.
So all of that was going to unfold. And so that was the first thing that I wanted the readers to know about. And then the second thing I wanted to know about is that you don't have to get deep into the weeds of the technology just to really know how to use it. I've got an 8-year-old son, and about a year ago, I taught him how to use the microwave. It was a little bit of a scary type of experience, but I figured, hey, he's ready for it. He can do it. And I didn't teach him, you know, how the waves flow through the machine and how the atoms were accelerated. I didn't get into that.
The molecular structure
necessary. Yeah, exactly. And the same thing goes for the blockchain. I mean, I think that in order for the technology to be successful, it's going to have to be kind of behind the curtain, if you will. And that's what some of the smartest minds in the technology space right now are doing. They're making it a part of our everyday lives, but they're making it so that you don't have to be an expert in it to use it. Just like you don't have to look under the hood of your car before you drive from, you know, your home to the grocery store. So I see that this is going to be just a growth engine for the economy, and it's going to be a bigger part of our lives over many, many years.
Thank you. How did you even get into, so prior to, because the exposure to the blockchain in 2011, but how did you even get into asset management? Like, how did you end up choosing that field?
I just, I'm a kind of a numbers guy by just my personality, by my traits. I always liked the stock market. A lot of kids, they'd go after school and play sports. I'd go home and watch CNBC. I was kind of a strange kid like that. So just, reading books and you kind of see I've got a bookshelf behind me full of these different books that I've read over the years. And just that was, kind of where I focused a lot of my time and training. And so I got into the management of stocks and worked for a brokerage firm in Richmond, Virginia, where I grew up. And then I worked for
Richmond. That's where my in-laws are at. We go to Richmond once a year, at least twice a year.
Yeah, my family's still there. My parents and my sister's a teacher there in Chesterfield County. So
I know exactly where that's at. So what time was that for you? And the reason I'm doing this is because it lays a foundation because I know this is an excellent resource, highly annotated, worth getting. We're going to talk more and more about it, but I wanted them to get a foundation of how you even discovered kind of that point of difference about yourself, to say, hey, I'm actually better at numbers. This is something that like you said, everybody else, your friends might be like, hey, we're going to go do this pickup game. You say, you know what? I'm really curious about this. How did your curiosity end up leading you to your field?
Well, I tell you another thing about how I got to blockchain is when I was in college, I studied economics at the University of Virginia, and I wanted to go straight into the asset management business. And for whatever reason, it didn't happen that way. I graduated right after 9/11. And so there weren't a lot of financial jobs out there. And someone said to me, hey, why don't you go work for a company called Reuters, or Bloomberg was another one of the competitors. They said, that's a financial information company where they'd have terminals in the brokers' offices or in the people who are making decisions around how to allocate money. You'll meet a lot of people and you'll learn about how the data and all of the pricing and all that flows through the financial system. I thought, well, this isn't exactly what I want to do, but hey, that's, it'll be a good experience. And so I learned a lot about, again, that data management, databases, how all this information flowed through the financial system. And so when blockchain came about, I realized that, hey, this is all blockchain really is. It's an accounting system that utilizes computer science and other things that, I learned about when I was at Reuters. And so I coupled that with my background of managing portfolios, and things really clicked for me, as time went on. And so I do feel like I had a very unique background that wasn't by design, but it came up. So it was a unique set of skills and experiences that I had that kind of led me down this path.
So you already had a foundation because of some of the exposure from your early on curiosity, and then you were able to make those connections of saying, wait a minute, this is this digital ledger, it's got some computer science, it's got some other elements, but I recognize this. That's awesome that you made that connection. My next question for you is more philosophical. So when you think in terms of fiat, do you see opportunity or do you see crisis? What do you see?
Well, in terms of fiat, I think that the issue that we're facing right now is that the governments continue to print money to kind of make ends meet with our budgets, which I know just from common sense says we can't do that forever. And so I do think that digital currencies like Bitcoin and some of these other cryptocurrencies that have real utility, that have a way to solve use cases for commercial and economic problems, they will start taking a bigger role in terms of how value is exchanged from person to person. I do think that fiat currency, just in general, though, can benefit from the blockchain because we're still using these antiquated systems to make payments back and forth. You may think that, well, let's say I send you money to where you are in Seattle from me in Dallas. Well, it's not just a transaction between you and me. There are all these intermediaries that take time, effort, cost all out of the transaction. So just to give you a practical example, I have a personal trainer who, because of COVID, his gym went, that he worked for went belly up. And so I said, hey, you'd be really good with this. I know you've been wanting to have your own gym forever. He said, yeah, I've got a location, blah, blah, blah. Can you loan me some money? So I loaned him some money. And we went in on a Thursday afternoon to the bank to notarize all the documents. And I remember handing over, after all the signatures were put down, handing the check over to the teller. And my personal trainer asked the teller, when am I going to get the money? And she said, you missed the Thursday cutoff. So you get Friday, Saturday, Sunday don't count, but Monday, Tuesday, maybe Wednesday afternoon, you'll probably get the money. And he's sitting there as an entrepreneur. He's thinking, it's Thursday afternoon. I'm not getting the money till Wednesday. I got to get the plumbers and the painters.
Absolutely.
So just a simple transaction like that, we kind of tend to take it for granted, but you can make it so much faster if you were to do this on the blockchain. And that could go for so many other types of applications in our life, like credit cards could be made much cheaper if we could put our money onto a blockchain. We could probably reduce the cost of our mortgages and all kinds of other applications. And so I am really excited about the entrepreneurial talent and the computer scientists and just other people who are coming into this blockchain field and creating these applications on top of the blockchain to improve our lives. And
so when you got exposed to it, the blockchain initially in 2011, what was your initial attitude? Were you a believer? Were you an opposer? Were you a skeptic? Were you indifferent? And why was that, based upon what was available knowledge-wise for you? So when your initial exposure, those impressions, take us back to that.
Yep.
That Baxter, that iteration, because you're 10 years post 9/11, and what's your perspective?
So my good friend who lives out in California, I grew up with him in Richmond. He sent me an article about Bitcoin, and it was talking about how the price of it had collapsed, and that it was used by sort of these nefarious actors to trade value through the internet. And I thought, well, this is kind of interesting. I mean, as I kept reading about the technology, I said, well, that makes sense. They can send this value to the internet, and there's these cryptographic ways that they can define who owns what at what time. That's a really interesting facet. But I said, there's nothing really backing up Bitcoin. Why does that itself have value? I understood the technology. So I kind of put the whole idea on the back burner and didn't really think about it much for about a year, but I kept hearing about Bitcoin, and slowly but surely I started learning more about it. I tried to set aside the sensationalism. The headlines are usually, around the premise of somebody did something they shouldn't, or somebody lost something that in a way that they should.
Fear.
When I first got into the financial business, it was during the time of the go-go days of the internet, when that was coming along. And I started seeing history sort of not repeating, but rhyming. There were these similar kinds of themes that were coming up. Like when I was first working for a brokerage firm in Richmond, I remember somebody saying to me, this was probably in like 1998, they said, can you believe so-and-so down the hall was dumb enough to put their credit card number online to buy a pair of shoes?
It's so real.
And so that number is probably going to get stolen from. I'm like, yeah, it does sound kind of foolish to me. Now we do that, every day we're buying stuff.
It seems sketchy. Everybody, because we didn't know enough, it seems super sketchy.
Exactly right. You tend to demonize in some ways the things that you're not familiar with. But I continue to stick with the technology, and you really couldn't avoid it, but so much, because people were making money in Bitcoin and the price was going up. And so I just kind of kept getting drawn back. There's sort of this gravitational pull to what was unfolding. And I realized, wow, this technology really is something here. And that's really how it unfolded to me. One of the things that I would encourage your viewers to look at is there's an interview from 1995 between David Letterman on The Late Show and Bill Gates. It's really kind of shows you now, here we are roughly 30 years later in time, we've seen how the internet unfolds. Letterman's asking Bill Gates to say, hey, what is this internet thing? Can you tell me something about it? And you can tell Bill Gates, kind of representing the tech community, he's having a hard time articulating it. he's having a hard time getting all the excitement and all the good stuff into a quick segment. And here's David Letterman. He doesn't really know anything about it. He just doesn't understand it. And Letterman says something along the lines of, well, I heard this groundbreaking thing happen on the internet the other day. They had a baseball game where you could watch the game. And Bill Gates was going off on how great that was. And Letterman just said, I got a radio, Bill. Doesn't sound like I need this blockchain thing. And then,
wow.
and then Gates says, well, there is a big difference. He says, you can watch the game whenever you want. And Letterman goes, Bill, does a tape recorder sound like a good solution for you? And people tend not to be able to see the big picture with when it's unfolding. And I think watching that interview, it does put all of that into a lens that people can understand now that they've got hindsight in their favor. And I would encourage people to look at this, how blockchain is unfolding, very much like the internet and any other technology unfolded. When cars first got invented.
So you're making me jump ahead now, because contextually, would you say this is pre June 20 or July 29th of 2007 when the iPhone dropped, or is this, where are we at in this development of what they call Web3, of which I'm going to ask you a few more questions about? But
I would say we're right about at that point. I mean, what I see are the big trends that are driving further use of blockchain. One is just the adoption. More and more people are using this every day. And if you track those numbers, it's almost the same type of trajectory that the internet followed. And we're in about 1994, 1995, kind of that time frame today with the internet, or with the blockchain. So that's going to continue over time. The second thing is infrastructure is getting built to make it easier to use the blockchain and all the many facets. So like back in 2011, when I first heard about Bitcoin, I don't know where I'd have gone and bought it. Maybe there was a park in San Francisco or New York where you could go and
little random parks. Yeah.
Well, then Coinbase came around about 6 years ago, made it easier to buy Bitcoin. Now, PayPal has apps, and all these banks and all of these stores are starting. Tesla, et cetera, are taking cryptocurrency. And so if you've got one of these, a smartphone, which just about everybody has, you've got access to cryptocurrencies, and the more apps and the like that are built, it's just going to make it much easier to use. And then the third thing is we're seeing regulatory clarity come about. And so
we're going to jump into regulation. I wanted to ask you initially, though, what made you write digital finance? Like, who is your initial or target audience through this resource? And then also, why is it resonating so well? Because it seems to be doing well, from what I can tell. And I'm not in your bank account. I'm just saying I can tell how books do, because I'm a voracious reader. So I can tell when things are having momentum.
Yeah, I mean, when I started going down and looking into the blockchain, I realized I'd go down all these rabbit holes, and that there weren't a lot of structured books or sources where you could learn about kind of high level topics in blockchain. And I thought, look, I'll write something specifically about the financial industry, and I'll try to make it as simple as possible, but no simpler was sort of my mantra of how I wanted to go about it. And I think there was a need for that when the book was published. And I had all of these ideas in my head, and I thought, I need to just kind of put pen to paper and organize this stuff in a way that someone with a basic financial and basic technology background could understand. And so I think those ideas have resonated very well, and the trajectory that the blockchain has gone down over the last couple of years since it was published. I mean, it's following a lot of those things that I outlined in the book. And so I think
we had the privilege of, I told when I reached out to Baxter, our team reached out to Baxter, I was letting him know how one of his colleagues, Jake, who was one of our previous guests, the reason why I enjoyed and reached out to him is because my 11-year-old son at the time, he's 12 now, but at the time when he was 11, he said, Dad, what are you reading right now? And he was looking over my back. but he was able to grasp the concepts because of the way that Jake broke it down in there, we could have conversations about money instead of me talking to him and saying, well, the Federal Reserve, and this is the private West Central Bank, and this is the, fiat currency. He broke it down, and this very similarly, Baxter uses a lot of great graphics and breaks it down visually for people, because if you're just kind of up in theoretical 30,000 foot view, it's harder to really make it usable. So I appreciate that about it. So why do you think your book is resonating so well with audiences before we actually start talking about more of the content of the book?
Yeah, I wanted to make it relatable. I as you mentioned, I wanted a lot of illustrations because I think a picture's worth 1,000 words. It can probably describe stuff a heck of a lot better than I can do. Number two, I wanted to have things like case studies, what's unfolding on the blockchain that's relatable to somebody. Why is it going to affect their life, their job, make things simpler, better, faster, cheaper, whatever it might be. I've included some historical perspectives because I think people work well with stories and they can relate to those stories a lot better. And then I highlight a lot of industry trends so that people could see the direction from a high level where this story was unfolding. And so I think by keeping the content well organized and kind of providing these bite-sized ways to tackle these complex topics really resonated well for people.
What do you enjoy about the feedback you're getting from the book thus far before we start jumping into more of the content?
I'm just happy that people are learning about this stuff and are realizing that we have a better future ahead of us if we really embrace this technology and we put it to use. And I think the biggest impediment to that is this lack of education. People don't understand it, so they just kind of sit on the sidelines and don't get involved. And when I hear people, when I talk at universities or I have webinars like this, coming back to me and saying, "Hey, what you said really, struck a chord with me, and I want to get involved in this," that puts a smile on my face. It really does.
So when you say the terms better and faster, right, bigger, break that down for us. Break that down for the audience. When you talk about that better and faster and bigger, why should a person, what's an elevator speech you would give to someone about blockchain and why they should be paying attention to it?
Sure, it's going to create incredible amounts of efficiencies in our life, making things easier for us. And it does that by cutting out intermediaries. So like I said earlier, if you go to the grocery store and you want to pay with your credit card, that takes costs to do that. It does that service in for free. The credit card companies are going to charge the grocery store, which means they're giving you higher prices. So by doing a blockchain-based system, you can cut out a lot of those centralized systems or gatekeepers, if you want, tolls that are extracted on you in a cheaper way. It's faster, as I mentioned earlier. The example of the loan that I made to my personal trainer, instead of waiting 5 or 6 days, now you're waiting 5 seconds.
What does that mean to the small business owner, to the solopreneur, right? What is that difference of time?
Oh yeah, I think that it relieves red tape, which not only means a bigger bottom line for you, but also just the mental anguish and just the having to wait around for things. You can channel your energy a heck of a lot better. It's
Absolutely.
The way I look at it as an entrepreneur myself.
So faster, getting rid of the middlemen, so to speak, the intermediaries, the steps, almost the red tape, the bureaucratic systems that might be quite a bit antiquated. That is a benefit for people. So can you give a basic understanding of when we talk about the tokenization? That's the main reason that I brought you on, because I feel that you brought it to a very clear level in your book. Talk about the tokenization, or talk about tokenization of assets in particular, and talk about tokens and the different types of tokens and make it in a practical way, just as you do in the book, so that people can connect to this idea, because they hear tokens and we used to have Chuck E. Cheese back in the day, right? They're just like, oh, that's Chuck E. Cheese.
Sure,
What are they?
sure.
They're talking about tokens with money? No, thank you. I'll take my dollars. You know?
Yeah. Well, I mean, what's interesting about it is a token is really just a digital representation of ownership, just like you have a paper representation of ownership. So think about it this way. 20 years ago, if I wanted to fly from Dallas to Seattle, I'd have to call up my travel agent and say, hey, can you get me a ticket on this date and roughly this time? And he or she would call me back and say, okay, hey, here's the price. And we're going to mail you some tickets in that the post office is going to deliver to you. You'd get that ticket, you'd go to the airport, and that's the way it would work. Today, what do? You go on, AmericanAirlines.com or whatever it is, airline.
Yeah, something like that.
And now your ticket is in your phone.
Yes.
We're going to see the same thing. Instead of having a title to a car or a deed to a house in paper form, it's going to be represented in the digital form. And there's so many reasons why it's superior to have it in that digital form, because you can program on top of the blockchain all kinds of additional added features that make it easier to possess this stuff in the digital type of format. So just a basic idea here, like let's say you own a home. That home, that's an asset, right? Let's say you put the title to that home in the digital form. Well, you've also got, most people have a mortgage on that home. That's another asset, right? But those two assets are kind of linked together as long as that mortgage exists. So what if every time you paid your mortgage off, that would affect the token form, and then once you paid it off, it would relieve the liens that are on your house? There's that interoperability type of feature to it that makes for again, a better, faster, cheaper system. What about, because now it's in the lien is in, or the mortgage is in token form. When you pay your mortgage off, typically you send it to a servicing company. Well, what if the ownership of that mortgage, instead of Bank of America owning that note, there's another investor wants to buy? The payments would automatically through the blockchain be sent to the new person. There's no extra processes or headache that has to take place when the ownership of that mortgage goes from one person or entity to another. So all of that leads to all that.
Refis and everything change. You don't have this long process to access the equity that's there and whatnot. You're saying it's cutting out a lot of that red tape and bringing some speed.
Exactly right. And take the house itself. Now that the title is on the chain, all of that history becomes apparent. It becomes available to be accessed and to be reviewed quickly and easily. So you may be able to have cheaper title insurance for your home. You probably have easier record keeping around the house. Goes all the way to like the county or the government entity where it's recorded. Just makes it easier to maintain all of that stuff over time.
Talk a little bit about Fidelity Investments as one of these usage cases.
Sure. So Fidelity Investments, one of the biggest asset managers in the world, they realize very much that the digitization of assets is here. They've started to custody Bitcoin as sort of their first digital asset. That's going to lead to a lot of retail investors and institutional investors being able to use a household name entity like Fidelity to get involved in this. I think that's very positive for the industry, but they're looking at it at an even higher level. They're thinking that they can put the ownership of these securities eventually onto the blockchain. And again, creating this better, faster, cheaper way of doing business. And so what that ends up leading to for the end customer, again, is lower cost, potentially a wider variety of investments that people can choose from, faster reporting times, better customer service, all kinds of different benefit, potentially continuous trading of securities. Instead of having a 9 to 5 trading time, potentially you could trade 24 hours a day.
Now that's massive, because that always didn't make sense to me about why. I mean, when you even give the bank example about why, since it's only numbers on a, why can you only go to the bank at certain hours, and then when it's closed, it's closed. Like nothing's happening on the weekend. That didn't make sense to me as to, now something was happening, but it just didn't benefit the consumer. So it's just
right. And because there are less manual processes that are required through a digital form of ownership, you don't have to have that human component in there, and those costs really flow back to the end consumer in the form of a lower price of ownership.
So can you talk a bit about asset-backed tokens versus commodity?
Sure. So like, I'll give you an asset-backed example of one that I purchased. So now in Dallas, we have a player for the Mavericks named Spencer Dinwiddie. He used to play for the Brooklyn Nets and the Washington Wizards. I invested with him about 2 years ago to buy some debt based on his credit worthiness. I thought, hey, this guy's a pretty surefire type of loan. He's got $17.5 million a year coming from the Brooklyn Nets. He wants to take out a $3 million loan. I gave him a portion of that money, and he, through the Ethereum blockchain, was providing for a 5% type of debt instrument. What was really interesting about that loan was that, again, it was blockchain based, and because of the programmable nature of the blockchain, he was able to issue this debt in a way that kept him in compliance with federal security laws. Like, so for
Absolutely.
example, when an issuer of that type of security puts out a bond like that, they have to make sure that the owners of those bonds don't sell them within 1 year. So if I try to sell you, Andre, Spencer's debt within 1 year, in a paper version, I could probably make that happen. Even though it's illegal, I could probably try to make it happen. Now, if it's on a blockchain, the blockchain is going to say, hey, Baxter, you have not held this thing for 1 year yet, so we're not going to let it transfer from Baxter to Andre.
It has a protocol set in place, and it has a lock.
Exactly. So those regulatory requirements are met by the code in and of itself. Another thing that was an issue for Spencer was the NBA was worried that, well, what might happen if a referee owned that debt, or a player on another team? Might that influence how the game goes? Or even if it doesn't influence it, maybe a reporter might say, hey, I didn't like that call that the Mavericks got against the Lakers, and I think it's because the referee owned the bond that Spencer owns. You can see why the NBA would not want that. So what's nice about, again, the chain is the NBA could provide a blacklist of people that they didn't want holding that.
Absolutely. It's programmable.
And what's great about that is, if, let's say, you want to buy the bond from me and I sell it to you, I don't have to worry that you're on that blacklist from the NBA, because the chain's going to enforce that for us. Another cool thing is, if I do sell you the bond, if it were in paper form, don't you think you'd want Spencer to be informed about that? Because you'd want those coupon payments from the bond going to you instead of to me, right? Because now you bought the bond. Well, with the blockchain, we don't have to let Spencer know, because the chain itself is doing all of that management of the cap table. So when he pays those interest payments, instead of going into my digital wallet, they're going into your digital wallet without any, again, manual intervention to do that. So that would be sort of an asset-backed type of a loan that's on the blockchain. I think is very exciting. Kind of shows a glimpse of what's going to unfold. I mean, that shows you the efficiencies that can come from being on the blockchain. It's kind of a new asset, because the everyday person wouldn't be able to get access to like an NBA player.
No, it's democratizing a lot, which we'll get more into. What would you say is a commodity? What's a commodity type?
So commodity would be like, for example, in Britain, you have what's known as the Royal Mint. They hold gold bullion and make gold coins for the British government. Let's say you wanted to own some gold, but you don't want to hold it yourself, or you don't want to buy it from an exchange. You can now buy it in tokenized form. And what's interesting about this is 1 token is the same as 1 ounce of gold. Now you might say, well, how do I know with the token that there's actually gold in that vault in the UK that's just been sold to me? Well, an auditor goes through once a month and they run checks and make sure that the mint actually has an equivalent number of ounces of gold as the number of tokens that are issued on the blockchain. The auditor can see how many tokens have been issued very, very easily and transparently through the blockchain. And then they can go in and make sure that there is physical gold in those vaults in that depository in Great Britain. So that's an example of gold being on the blockchain and being able to be traded 24 hours a day, 7 days a week through this exciting new technology.
Why did something like Libra not work?
I think that the technology behind Libra would have worked very well. What I disagreed with about their strategy was that they were having a basket of currencies. And what I mean by that is they had a little bit of the dollar, a little bit of the yen, a little bit of the euro. And so the prices of that fluctuate on a daily basis. And so it would be an accounting nightmare if I think I actually used in the book the example of a woman going out in Seattle and buying dinner with her Libra. If she bought those Libra for say $100 and then they became worth $103 because the value of the yen, the euro, whatever that was in there fluctuated, the tax man's going to have his or her hand out saying, hey, you got $2 worth of profit off that Libra that you held. You're not going to want to keep up with all of those.
No, because it's constantly fluctuating, and it would be frustrating, and it's frustrating to the vendor who they sell it to for it to immediately dip on the negative side. It's like, oh, it goes, by the time it's, the transaction's made, let's say it dropped by $4. You're like, right, you shorted me. And then they're coming, it's an accounting nightmare because now they're contacting the customer and say, hey, you actually owe us another $4.
Yeah,
I do.
Yep. Exactly. So you want to keep some of these things simple. At least at first, we want to keep it simple. That's where the growth is going to come from, is simplifying kind of everyday tasks, again, making what we do in our everyday life better, faster, and cheaper. And I think Libra was just too darn ambitious. They wanted to have one Libra coin for every country in the world, and we still live in societies where people transact in their home currency. And so I think
absolutely.
You have to pay the tax person who's going to collect those taxes in your home currency. So trying to go too far outside of the system, it can have its pains. And so we want to make things work and work well. And I just think Libra was too far ahead of its time.
Too early. What do you think about let's talk about these accredited versus unaccredited investors. So when people, say that there was a commercial project, there's this huge, 5 huge skyscrapers that are going to go up for commercial usage. The average person who's just getting started in investing and has some capital to invest typically is not going to know about a deal like this, correct?
That's correct. That's right. I think that the tokens give a better way for people to be able to learn about these things and transact into them, but there are still laws that require the issuer of those securities, in this case, say, the Empire State Building in Manhattan, to only go to accredited investors. That may change over time. I think they're looking to potentially edit that. I do think that opportunities should be open to anyone that wants to participate. But there is still this idea that there need to be safeguards, and that gets more to a political type of argument. But at least what I would say with the blockchain at this point is that the potential for people to be able to have access to those kinds of investments is increased.
And that's what I wanted you to highlight, is that there's opportunity, because now it can change the way that people think. With tokenization, it can say, okay, well, if we have these safeguards and it's already programmable, there's still a way to now give opportunity to those who traditionally didn't see an opportunity. The person issuing the tokens, of course, definitely having regulation and whatnot, because I just think that that helps the consumer. And what do you think? What do you think about in terms of IPOs? How could this change or benefit a company going public, and when I got exposed to blockchain and began, I was exposed super early, but I didn't take any action because, again, I thought of it more leery, and I don't know about that. It sounds a little strange, but come around 2018, into 2017, beginning of 2018, I said I want to start going to blockchain conferences, because I picked a field of something that I didn't know, that I was a little intimidated, heard a little just negative about. And I said, I just start forcing myself to go to these meetups and whatnot, and start listening to the different panels and asking questions and engaging. And I said, all right, let me get a hold of some of this. And the worst I could do, I told my wife that let's do the set it and forget it experiment. And we hit I think it was the 2-year mark. I said, when the 2-year mark happened, it was up what we put in. And I said, oh, I want to pull it out. And she says, you haven't even thought about it. Just leave it. Like, let's just see what happens, and then let's learn more about it, but let's see what happens. And I'm glad I did, because it surged up more. And now, even in the lowest time, it's only went down. I'm still been up like 4 times what I initially put in. So it's just interesting, of course, to expose ourselves to more information and to learn things, and to be as prudent as we can. What do you think about Web3 and Ethereum, with the ability to, basically the future of Ethereum? What is your confidence in Ethereum and kind of, the smart contracts? Just break that down a little bit based upon your understanding and Web3.
Sure. I think Web3 is a very interesting concept. And I think it will become a reality as time goes on. I mean, people say, well, first of all, what is Web3? And probably the easiest way that it's been described is Web 1.0 was a static sort of website. It was the website. They created the content and they owned the content. Web 2.0 is the user creates the content, but the website owns it. So think Facebook. You go in there, you put pictures up there, you put memories, thoughts, whatever it is. The advertising, the eyeballs that go on that content, the revenue flows to Facebook, right?
Yeah.
And so Web 3.0 is the user creates the content and the user owns the content. So if you go out and you make an interesting video, or you post your web podcast up, you've got a much better chance of monetizing that and capturing the benefits through Web 3.0 than you would through Web 2.0. And so I think that is really in the grasp of society right now, because the tokenization of assets, the blockchain allows that not only information but value to transfer through the internet in a much more efficient way.
They're calling it the creator economy.
That's right, exactly right. And it's going to take time for it to be developed, but the trajectory we're on right now certainly leads me to think that we're going to see much more of it over time. As to whether or not Ethereum is the winning platform on which it's built, I am still a little bit skeptical. I think that Ethereum is definitely the front runner right now, but it's too expensive to transact in Ethereum right now. And we're not seeing the types of volumes and transactions that I would like to see. Like if the blockchain is going to experience a lot of the potential that I outlined in my book, we're going to have to see a chain that is cheaper, that can handle more throughput, meaning it's scalable. It's going to have more security types of features, and it's going to have a governance mechanism that's flexible and can accommodate necessary changes. And so there's some other protocols out there that I think are definitely contenders that could dethrone Ethereum.
Who are some of the ones you think that are in the wings?
Well, there's people are talking about Solana. I have a little bit of skepticism around Solana. It's had some technology issues over the last couple of months. I think Avalanche would definitely be one to watch. And then there's one that people haven't heard about as much called Hedera. It's actually based here in Dallas. I really like that one. Hedera Hashgraph. It was started by 2 former colonels in the United States Air Force. They were professors at the Air Force Academy. And if you know anything about that part of the country, in Colorado Springs, there's something known as Cheyenne Mountain. And inside Cheyenne Mountain is NORAD, where they have all the defense mechanisms for the U.S. nuclear arsenal. Those two professors, they actually created all the message authentication and all of the safeguards to make sure that Iranian terrorists didn't attack the system, or North Korean bad actors, whatever it was. God forbid, if a nuclear missile ever gets launched by the United States government, they made sure that it was authorized by the president or whoever had the authority to do that. So they, at the highest levels of security, have been able to create this that type of a communication system. They have applied the same kinds of principles to this hash graph technology, and it's led to large corporations like Boeing, IBM, Google, Ubisoft, the largest video game software company in Europe. They've all signed up to build applications on this chain. And I think that one is a contender. It's one that people haven't heard about. I kind of say it's the sleeping giant.
It gave me that, when you said that, gave me goosebumps, because there were two guys who were walking around. They weren't speakers at the conference, and they were talking about like one of the ones I went to in 2018. And in my mind, I'm like, slow down. I'm just trying to get a hold of this in the first. And they were like, this will bypass this. This is more secure. And in my mind, I'm like, I'm still trying to figure this out, So it's powerful to hear years later. Here it's 2022, and you're saying this, and I'm like, wow, I haven't thought about that since then.
Well, just to give you a little bit of flavor of what has been, what type of transactions have been consummated on the Hedera Hashgraph blockchain. In Great Britain, you have the NHS, the National Health Service, which is the socialized healthcare system in the United Kingdom. They tracked all of the COVID-19 vaccines. So every time a vial left a distribution center and went to a doctor,
on a ledger.
Let's write that in the ledger. Every time a dose gets given to a patient, write that in the ledger. Every 5 minutes, the containers that held the vaccines would report the temperature back to the chain. So they got to get it. You had to keep these vaccines at or below a certain level of temperature, otherwise they would spoil. So by having all of that tracked, traced, audited on the blockchain, the government thought, look, we can reduce risks, we can disseminate these things much faster and better than we could by not using a distributed ledger. I think that's a huge vote of confidence for a technology like Hedera Hashgraph.
Because I think about agriculture, and I think about businesses, warehouses. I think about the opportunities for people to really keep a strong inventory. It's kind of an auditory or an auditor and an inventory nightmare most of the way, because there's a lot of, and I'm not a person who, I do believe in the value and utility of humans. I don't think anything will, so I'm not a person that over indexes and just says, we don't need humans, we just need robots. But I think there is a way that the technology can be used to make things more efficient, that you can connect, that you can leverage it for benefit, that people can start seeing higher margins of profit, or more impact on making sure that the deliverables that, hey, we saw, not only did I know it was a local cow, but I lived in that neighborhood, I knew that what the cow was eating, and you know what I mean? And
you can know what went into a product, and you can be sure that you can trace all of that, the procurement of those products, back to the source, which is what blockchain is all about. And what I see happening in the cryptocurrency markets over time is that people will start realizing this utility value of crypto. And what I mean by that is that if Walmart wants to put its supply chain onto a blockchain, or Louis Vuitton wants to put anti-counterfeiting measures into its shoes and its handbags, they're going to have to go out and buy cryptocurrency and use that cryptocurrency or spend that cryptocurrency in order to do that. And so they're going to have to buy crypto just like they buy oil or electricity or iron to make goods and services. And so crypto will start being seen almost like this industrial commodity that's going to be necessary to best market and produce these goods and services. And that's going to be an interesting moment when the market really realizes that these things aren't just casino chips that people speculate on the price of. Now, I would say 95% of cryptos out there are kind of junk. There's no
Oh,
real
absolutely.
but
That's why I asked where we were in the timeline in your mind, because is this right before all the, cough.coms are about to, is this right? Is this the boom before the bust? And then now it's kind of like they're true players that actually solve problems and offer value and utility remain. So are we kind of clearing the field still?
I think we are. We're moving from like what has been termed a bull market of ideas, meaning, hey, I'll just kind of throw this idea up and people buy it. They buy it. If they don't, I'll just come up with another idea and try to sell that.
Yeah.
The sort of the sizzle, not the steak. We're moving into this bull market of utility where people are going to start saying, hey, what's the business model behind this crypto?
Yes.
What can it do for me to make my life better? Who else is using it? Those are going to be the new standards by which crypto is judged going forward. And so I see a sifting of the good from the bad unfolding in the marketplace.
So when I started in 2018, it was funny because that's what was happening with the ICOs. Is you could have a group of teenagers in another country go and get the internet, get some photos of some people that look credible, put some bios up, have a white paper that set and raise the money and disappear, because it was the Wild West, so to speak. You know what I mean? That people were just excited about the idea of like, this is so new, I want to be first in, and they just jumped and they didn't really do their diligence to say, okay, well, who are you? What are you actually? What is your track record? What value? What problems have you solved? Are you know what I mean? So I'm glad that you even pointed that out in the book. I'm kind of most captivated by the opportunities for creatives with things like NFTs and DAOs to get almost their bit of agency back as creatives, because a lot of times they were last to be paid. That's everything from, or they might not get paid at all, or they get ripped off in what they were doing, from playwrights to directors to, just inventors even, inventor. You have the guy who created the Super Soaker, and, they were supposed to, and it became their best-selling product, and they were supposed to pay him, but he had to go and audit the books, and they owed him like another 40-something million back. And they had to, catch him up and keep on for the life of it. But just a lot of things like that, because we don't know all the weeds of legalese and how to keep up with the best attorneys and whatnot. What is your thinking around ways for creatives to engage in this reformation? Because they might be leery of the tech, and they kind of got burned by the older business models.
Well, again, blockchain is going to cut out a lot of intermediaries and allow these creative people to go straight to the consumer. Just like, back in the day with the internet, if you wanted to sell, say, a Super Soaker, you'd have to go through Toys R Us or Walmart or some sort of a vendor to do it. Then the internet came around and said, hey, we can, I'll have www.supersoaker.com where I could potentially sell directly to the consumer. Blockchain is going to accelerate that even more by allowing people to go directly to the consumer, and the collection, the auditing, all of the record trail is going to be right there on the chain. So it's going to be much harder for somebody to hide what they owe to someone else. So if you write a song, I'm your distributor or whatever, if I sell through the blockchain to the end consumers, you as the creator are going to know what is your right cut. And not only are you going to know what's your right cut, the blockchain is going to directly pay you, as opposed to making me collect and then pay you, where I could potentially do something that's advantageous to me, that's not advantageous to you, that's against our agreement. The chain will be sort of the arbitrator of who's supposed to get what based on the code and the original terms that were forged out.
What are your thoughts on DAOs?
I think DAOs in theory are a great thing. I think it's going to take us some time to
get to that point.
And it's going to take a lot of trial and error. I do like the idea, but just not to get too philosophical, but it's like, in the United States we have the Constitution, and they say the Constitution is a living document. You've got to be able to change it and have people interpret things based on a set of facts, as opposed to just hard and fast, this is the way things are going to work. Like you said earlier, you don't want to cut humans out completely, because we're human beings, and we want to make sure that we do have some say in
that's what made people a little more leery of, when I talk to truckers in particular, in the trucking industry, about like self-driving truck and whatnot. And they say things like, hey, well, I don't want, if the computer is making the analysis of save my life versus I don't want to be a calculation.
Sure. No, I think
you're expendable.
We as a society have got to, through trial and error, decide what we want and what we don't want this technology to do.
And so as far as regulation, as we're coming to around in the corner to close out, what are you thinking, can the regulation and is this bureaucracy of things, is it going to stifle, or is it going to help the financial reformation? So is it, you know what I mean, as things are, because I love how you lay out different nations that are already ahead of the curve, that are trying to take a proactive view versus reactive. And then you also lay out how they can be some players. What are your thoughts about how regulators should engage with this, and how people should look at regulation who are in this field? Because some people are scared to get in because they don't feel it's regulated enough, and then others are going to wait too long, and then it becomes, you know what I mean? Like now they
Yeah, I think in order for this industry to grow and to really realize its potential, we're going to have regulation. This idea that the blockchain is going to take over and it's going to set up all new rules on its own, I don't subscribe to that. I think we're going to have some groundwork, have some just direction from the government as to what are the rules and what are the expectations if certain things unfold. To me, the biggest stifling of innovation is coming from the government not coming out with any kind of rulings on stuff and leaving that ambiguity. It's sort of the old saying, the start stops things, because we haven't started, it stops things from happening. I do feel like there's several catalysts out there that are kind of forcing things to a head on Capitol Hill in Washington and in other governments around the world. And as I highlighted in the book, there are countries like Singapore, the United Arab Emirates, Switzerland to a lesser extent, that are ironing out these questions and saying this is how blockchain will be viewed in the eyes of the law. And that's causing business from overseas to flock to those countries. And
absolutely,
there's going to be a day when the bankers in New York or London or wherever, they're saying, hey, these smart people in other countries, they're eating my lunch.
Yes.
Representative in Congress or Parliament or whatever, you need to get your act together.
Absolutely.
And maybe even if you just take what they've already put together and pass that into law here, whatever it is, it's creating an inertia where we get these questions sorted out. And so I think that's a good thing. I think that the executive order that the Biden administration put out a few weeks ago was good. And they said, look, our overarching idea is we want the United States to be a world leader in technology, and we don't want to stop things dead in its tracks by being too stringent around our rules. And so I think that was a good high level way of thinking about this. And it's going to take time. It's going to, like I said, kind of trial and error. It's not going to be an overnight kind of process, but it is starting to head that way.
But the reluctance and the ambiguity is what you're saying that more concerns you. It's like, don't wait until things really get, like you said, the stop being the stop. Don't wait till things get rolling and momentum and then come in way late to the party saying, actually, this is illegal. We can't do this. We can't do that.
Right. And the other thing that I would say is the government not doing stuff. It could lead to accidents in the market or bad situations. I mean, I think that I think less is more from the government generally, but I do think you need to have, again, a clear set of rules, and you need to route bad actors out. The example that I would point to are these stable coins right now. Those are basically the dollars on the digital rails that a private bank would offer. That's a $200 billion market today. And we have rules around how banks have to operate, where if I deposit my paycheck or you put your life savings into a bank, you want to be darn sure that when you go back to collect that the bank will give you your money.
FDIC, right?
And the stable coins are not operating under those same parameters. And the stable coins right now are the lifeblood in a lot of ways for the prices of these cryptos. And if the proper type of accounting and the proper type of assets that can be would be assumed that these banks are dealing with aren't being adhered to, that could cause a big problem in the marketplace. And what that will ultimately do is, if there's a disaster, it'll make people in the general public say, hey, this blockchain thing is not safe. And it's not that the blockchain, the technology is not safe. It's that the mechanisms by which these people were operating under weren't what they should have been. And that's why the regulators, to me, need to get in and sort these issues out now, as opposed to
on the front end,
something bad to happen.
Yeah, don't wait until and then react. And then lastly, what would you say are some of your own greatest hopes and dreams for the blockchain and Web3, basically where things are headed? What is something that you see and you're like, man, I'm really anticipating and expecting, and I'm be excited to see these things happen. This outcome would be great to see.
I think big picture, the blockchain brings about three things. I think it creates efficiencies, which is probably the biggest thing that it's going to bring about. Number two, it's going to create the potential for new products that people have never even thought about. I think that's really great. And then the third thing is it creates new distribution channels, which we've talked about. And so what I would love to see is this create opportunities for entrepreneurs to fulfill their dreams and to create all kinds of new businesses to help themselves and their family and the broader society. And I think it will also bring about the potential for everyday people to get access to cheaper credit and better banking services, really.
Yeah, I love the loan section, by the way. That was of the book.
Yeah, I mean, if you have a smartphone and you have crypto, you have access to a loan. And that will be the way that things unfold over time. And so I see that as, again, this sort of democratizing money and putting power back into the people's hands, and the pricing mechanisms that a capitalist type of system would foster. It really is facilitated by the blockchain.
And then lastly, this is the real lastly, right? We get three closings if you're a speaker, right? What are you planning to do with the momentum of the book? What's next?
Well, I've got my firm, Honeycomb Digital Investments, where we're helping people get access to some of these blockchain investments. I saw a huge need for there to be professional money managers who understood risk, understood the technology, to come in and help everyday people get access to these kinds of an investment. So I see a lot of opportunity there. I see opportunities for entrepreneurs and just asset holders to tokenize assets. So we're working with some different projects there. I'm just really happy also that a lot of universities are using this book to teach, and corporations are using it to get their employees up to speed on how this technology is going to be the biggest thing since the internet. And so that, just a lot of great things have come from that book. And I really appreciate you taking time to highlight it here today on your show.
Absolutely. Where can they find you? How can we find you on all things what? And we're going to post your information you gave, but I want you to share it with the audience as well. So we have the clip.
Sure. There's digitalfinancebook.com. Also check it out on Amazon or your favorite book retail. It's available in hard copy like you've got there, Andre, but it's also available for people who like audio copies. You can download it onto your iPhone, your Kindle, whatever it might be. Listen to it in the car, listen to it when you're taking a walk on your phones. We've got a lot of different ways for you in which you can access the content.
Well, thanks, Baxter, for being here. I'm really pumped because, like I said, I don't just pick people based upon things that I'm interested in. I'll also pick them based upon how the resource is useful. And this is a very useful. I'm definitely going back to it as a reference book, and we'll have our children. We have a 12, a 9, and a 5-year-old. So be able to pull some conversations out because you created a great resource, and look forward to more. Is there more writing in the future possibly?
We put out content through podcasts. I do some written pieces that are available on our website, honeycombdigital.io. Who knows? Maybe I'll write another book at some point. We'll just have to see how the future unfolds.
Well, thanks for being here, Baxter. I'm excited for the future, and thank you for your time. And this is going to add a lot of value to a lot of people.
Great. I appreciate you having me on your show today.
Thank you for listening to today's episode. Do us a favor. If this was useful in any way for you, please go to iTunes and leave us a review. Reviews will allow others to easily discover the podcast. If you'd like more information and to receive a free download, rediscover your destiny, go to ceofdestiny.com. Thanks again, and tune in next time.